This volatility edge is the reason we care to do a deeper dive in Southwest in the first place. So let's now move on to charts and see if there's a setup we can take advantage of. Now the setup we'll be using for this stock and the other stocks is our momentum signal setup. If you haven't already seen this video, I'll leave a link to it in the description box. It's 6 minutes, which gives you many more examples of the same setup that we'll be discussing right here in this video. Now, Southwest Airlines first breaches our aggressive volatility box when we breach the aggressive clouds, and then the conservative volatility box when we breach the conservative clouds. Now, as that's happening, we have a series of Keltner channel wedges that are plotting. This tells us that price action is closing outside of the 3.0 Keltner channels, which means we're really looking for a reversion to the mean type of idea. We need to wait for our trigger first. And in our case, our trigger is our overbought, oversold indication, which is the edge signals indicator, and that's this green arrow right down here. So that arrow comes shortly after the Keltner channel wedges stop plotting. We then have our overbought, oversold indication, in this case oversold, and that tells us that, hey, we are really looking for buyers to step in here and hold this low right here, 37.39. So this is the first point of entry that you have available to you. The second point of entry is when we have our momentum signal. This is for those of you that like to wait a little bit more for confirmations. This is when that 3 EMA crosses above the 8 EMA. Whenever that happens, you'll see the cyan dot. Here we have a cross above, a cross below, fake out, and then one more time, and then we have a nice pump inside of Southwest Airlines. In terms of the actual entry, using the momentum signal as the entry, our risk required on this trade was about 35 cents, and we were looking for that same 35 cents in terms of our first target, which was hit in this green candle right here. This was the candle in which that was hit. Now after that, Southwest Airlines continued making a move for another 30-ish or so cents, so a max move of about 65 cents from the entry, and the second batch was at a break-even stop. So that one you got to ride a little bit more stress-free. So all in all, using the underlying here, we had the first target, which was 35 cents. The second target went up to about 65 cents, but really we were looking for T2. So you could call this either break even, or if you were trailing your stop, you probably got taken out when price action reversed right over here. Now the question is, how did the same setup look like on a chart of the options chain, or a particular option rather, of Southwest Airlines, which does have the luxury of more volume? When I say more volume, I'm talking in the, say, 500s to thousands. That gives you candles that you can at least plot on your chart for the actual options chain. Here we're going to use the 30H strike as the example. That was the one that looked most interesting to me, had the greatest volume, good amount of open interest, and a bid-ask spread where it still made sense to trade this given commissions. Now at the time of entry, when the underlying setup took place, the entry was right near that 835-ish mark, and the option was going for about 35 cents. This is again a chart of that 30H strike call, and we're plotting that as candles. The fact that it has some liquidity here allows us to see this at least a little bit more with historical data in mind. Now here we have the same setup taking place on the actual option itself. We have Keltner channel wedges that are plotting. We have the edge signal confirmation. We then have, this is where the actual entry takes place on the underlying. And for the options chart, we also have a momentum cross that takes place, after which point in the option, you have a nice pump. Now the benefit of using the options chart here is you have prices, tangible prices that you can use in terms of setting your stop outside of. For example, here, say this is 30 cents on the actual option, and you can use that to plan your trade, especially for those of you that are options traders. Now, particularly with the underlying in mind, this is how Southwest Airlines moved. We went from 35 cents at the point of entry to when we hit our first target, right around when that momentum cross also happens, about a 20% gain in the underlying. A little bit more than 20% if you're being a bit more aggressive, but I'm trying to be purposefully conservative here and use the worst case scenario numbers just so we have an idea of what we can expect. Now, if you had a perfect crystal ball and you could time the peak of this, the max move that we made in this options contract was to a price point of 68 cents. So about a 94-cent gain from our actual time of entry. So this was much more lucrative compared to the underlying. So this led me to then go down a little bit more of a pathway of discovery. So let's come inside of our Thinkorswim charts. And I started using our live scanner, trying to apply a similar idea here on stocks where we had liquid options. So some other tickers that also stood out were from our hourly tab. Now on the daily tab, I was still using the 5-minute. On the hourly tab, I think you need to be a little bit more in the scalping mindset. So using something like a 1-minute, maybe even a 2-minute chart, at least as of the volatility we have right now. And there, if we come in and we try and find some tickers that have some nice high volatility, there were a couple that stood out. One was GLD. This was gold. And if we take a look at the GLD ETF, we had GLD hit our live scanner for an aggressive short opportunity. And that was right here, aggressive short. Now, if we take a look at this with the same setup lens that we've just been discussing, 1, 2, 3, 4, 5 Keltner channel wedges. We have the edge signal confirmation. We have our momentum signal. This is on that 1-minute time frame chart. And really after that, we're looking for gold to go away from this direction right here. That bare minimum move, at least a 1-to-1. That is the move we were looking for in GLD. Now using options inside of GLD, if you use the same momentum signal as your point of entry, the 166 puts went from 54 cents, and in this little move down lower, they went from 54 to about 60 cents, which is a gain of 11-ish or so percent as another data point. Now, what I'm more curious about is what that would have looked like in the sense of a reversal, and I am curious if that loss would be a little bit less than the 11%, given that you were buying a put when already momentum was going against you. That's the thing I'm most curious about here. Another example was Exxon Mobil coming back inside of our scanner. Exxon Mobil, another stock, aggressive, this time aggressive long. And Exxon Mobil set up earlier in the day. This is 8 to 9 a.m. Pacific. Same idea here, Keltner channel wedges plotting all the way as price action falls inside of our clouds. We have the edge signal, we have the momentum signal. The close of this is what I used in terms of our actual entry. Our stop is below this pivot point right here. And this risk to reward is what we're looking for, about 63 cents inside of Exxon Mobil, which we make as price action continues to keep pumping up in these candles right here, in this little chunk right here inside of Exxon Mobil. Using options, the 103 call here, which was the at the money calls at the time of entry, the 103 calls went from 132 all the way up to about 156 at the time of exit. So that was another data point that I found useful. For those of you that are stock Volatility Box members, you might find it interesting to try a few more stocks. We had things like JP Morgan, PayPal, Caterpillar, so other stocks that also stood out that have liquid options that you might be curious about to try and see if there's some interesting scalping opportunities, both on the hourly models, along with slightly longer term reversals using the daily models as well. I hope you found today's video to be useful, especially for those of you that are options traders. My goal here was to give you a few different ideas of the same setup, but trying to apply that setup on not only a chart of the underlying and playing that with options, but also applying that same setup on a chart of the actual option in itself. Take care, everyone. Good luck trading, and I'll see you in the next update.